All right, good morning. Happy Tuesday to you guys. How is everyone doing today? Welcome back to the New York Live Trading Room, kicking off our first day of the week. Of course, Mondays are reserved for the Q&A session, which yesterday was a really good one. I'm excited about that. Talked a little bit about prop firms, following up on the weekend video and going into more detail about strategies you might want to use, adjustments you might want to make, all of that fun stuff. Raphael, thank you as always for the good morning blessings, health, and wisdom to us all. So we're going to get started here. If you guys are joining on the live stream, welcome to, I just call it the trade of the day. What I do is I open up my live trading room to you every Tuesday, Wednesday, and Thursday, and share with you the first idea that we go over in the market before kicking you out and doing the same for many, many other pairs to go. But I think it's cool that you guys get the experience of kind of coming in and seeing a trading idea on a daily basis. I think there's too much out there on the internet. Someone brought this to my attention before the year closed. There's too much out there where it's just everyone shows you stuff in hindsight, where it's like after the fact they come in and it's like, oh, woulda, coulda, shoulda, did this, did that. And I think it's important to see the live analysis, and it's important to see when it works. It's important to see when it fails, because the result isn't the main factor. It is all about the process. So we've got some pretty, currency markets wise, we've got some pretty consolidative markets today. And there are a lot of patterns, potential advanced patterns on my radar out there as I went through all the pairs this morning, which is expected when we see consolidation. And today is the calm before the the storm. Cody says, look at that hour gap fill in the SPY. Yeah. Added some more last night, Cody. Soon as I heard markets crashing, I said, let's get some more exposure in and buy for cheap. I don't know if you heard, did you hear the Q&A yesterday, Cody? We had a really good conversation about, I'm on the board of a nonprofit, and we were kind of having this back and forth about investment strategies. And I technically don't have a vote. I'm technically not affiliated with the board, even though I'm on there. In a sense, it's a weird situation, but legally not technically getting a vote. But there was a back and forth between investment strategies. Should we be more aggressive or conservative? And it was just hilarious hearing the back and forth. And I pulled one of the guys to the side at the end, and I told him, I said, hey, welcome to the reality of how most people are, on how fear-based most people are. That is the markets, and it is exploited, and it is not a bad thing to think and do the opposite of what most people are doing when it comes to investing. And it made perfect sense. You never realize it until that moment. But we're just looking at QQ yesterday. There was more volume than there was last 10 years. Yeah, it's fear and panic to the nth degree. The cool part is, right, not to get too much on an investing rant, once you understand what to look for, there are basically just warning signs of when to prepare. So if you got your go bag ready, right, that bag of money that's ready to invest. Let's say you're doing like kind of like a dollar cost averaging type of strategy. You just wait. You wait until those red flags, and you wait until something's cheap enough, and you say, you know what, all right, let's put some more in, and then we'll hold out and save or take whatever portion of your paycheck for the next couple months, and then the next time and do it again. But economic calendar. So today, pretty light. Hey, Stewie. Today, pretty light. Tomorrow, however, this is what the markets are kind of preparing for, right? If we go to Wednesday, we got a lot of stuff happening on Wednesday. Bank of Canada monetary report, rate statement, rate change, right? That is going to be a big one. We've got Bank of Canada press conference afterwards. We've got FOMC statement and Fed rate after that. And I think we have GDP on Wednesday, or Thursday, but we'll talk more about this tomorrow. But if you're noticing consolidative markets today, again, it's to be expected knowing what's coming out tomorrow, because the thing is this, right? Does anybody want to overly play their hand before tomorrow's events? No, right? And people are saying, well, aren't people out there anticipating what it's going to be and they want to position themselves beforehand? Yes, but understand that. See you, buddy. Have a good day at school. Um, Understand that people that are positioning themselves, they're doing that weeks and months, and maybe not some cases years, but weeks and months in advance, right? So the positioning that you see again, and the position that you see for these news events happened a long time ago. The movement, if any, that you see off these news events aren't going to be about the actual event unless we get something that is very disruptive, meaning something that is unexpected. But it's going to be positioning yourself for anticipation of the next news event. So it's always, you know, the smart monies are always thinking, and smart traders or investors are always thinking in the future. They're not thinking about the now, they're thinking about the next, which is really interesting that I mentioned that because that's a flaw that I have that I never actually associated with the market. People ask why I don't get emotional, like I didn't cry when my kids are born. It's like I don't celebrate a lot of stuff because I always think about next. Right? As soon as the present happens, it's the past. So I'm like, there's no point in worrying about the past. Let's think about the future. And I never thought about that. Maybe that's why I'm a good investor. Who knows? But anyway, that's kind of interesting. Let's go to today's trade of the day. I do like talking about that stuff because it is important. And we're going to go to, where do I want to go to? We're going to go to Euro New Zealand, right? So not one that is in my personal portfolio. You can see it's down here in my secondary portfolio, but one that has a pretty cool trading opportunity. So we're going to start on Euro New Zealand on the daily. And I want you guys to tell me, what do you see, right? IPDE, identify, predict, decide, execute. What we're going to do in the higher time frames is just evaluate the markets from a bird's eye view, or my higher time frame. Your higher time frame could be something else. We just want to see what the market has done, what the market is doing, where is the market at relative to important levels. For me, important levels are structure. Stewie said I took the nice long on pound yen this morning. Currently in a pound. I'm in the pound dollar long as well, Stewie. That was when we talked about. We had a fun Q&A yesterday where we were talking on the chat on the platform, and we were going back and forth. I literally pulled the guy, literally reached into my computer, pulled the guy from the chat platform. Get Clive, get into Q&A right now. And then we broke down the trading opportunity, which is really cool. Then and then Clive followed up later. He's like, Akil, we're down there. You're right. It did this. And then I ended up taking the trade. So another opportunity on that too. It could double bottom. We'll get to that later. But yeah, what are we noticing here? So someone on on YouTube says a bullish head and shoulders, right? We can see that. Head, shoulders, knees and toes, right? We got a left shoulder right here. We got a bounce back. We got the head. We got a pull back. Now, depending if you're a horizontal or trend liney neck guy or gal, it's going to be different. But your right shoulder is going to be there. If you use horizontal support and resistance, it's going to look like this. So let's look at that horizontal support and resistance. Well, I guess if you're using the trend line, you have a break of the neckline, right? So you have a validation of the head and shoulders. You can easily look for a pullback. Get the right button. You can easily look for a pullback and a continuation higher to wherever your projection point is, probably somewhere up in here, right? We have a lot of consolidation here, but these are your highs. If you're using the horizontal level of support and resistance, what do you notice here? And Orsi mentioned this earlier. We had to hold the structure, right? So the keel will want a pullback after breaking the neckline. Yep. Well, yes. Now this would not be a head and shoulders I would be interested in. I use horizontal support and resistance, so this white line would be the one that I would be interested in. So we would need a violation of this. There's just not any meat on the bones. If we violate this, the question is, where are we likely to go? We're already at resistance. So this would be a good example of, maybe on a lower time frame, you can get away with something, but this would be a good example of, hey, it's a setup. Yes. And this is a very important lesson for you newer traders. There are going to be setups that are beautiful, but just don't have meat on the bone. Does that make sense? There are going to be setups that look nice, they look good, everything meets the rules, but there just won't be enough room for profit, right? It brings me back to, so I watch a lot of National Geographic, right? When my wife goes away on like meetings and stuff, I get caught up watching the History Channel, Nat Geo, because eventually it ends to like space stuff and robot apocalypse. So I watch a lot of weird stuff, right? And I remember watching this episode on National Geographic about like snow leopards and how they have to be very precise in their when they hunt for food, right? Some of you guys are like, what does this have to do with trading? I promise it's going to come back to trading if unless I forget. Sometimes I get distracted. But they have to be very precise in their hunt for food, right? Because they don't eat that often. There's not a lot of animals wherever these snow leopards live. So they are extremely tired. They have a certain amount of energy that they can use. When they hunt, right, they do that full out sprint, right? They use up a lot of that energy. So they can't afford, like when they go for a kill, they can't really afford to not get the kill, or else they're going to be depleted of energy and they won't be able to get the next kill and they'll starve, right? So if you're this snow leopard, right, and you see this little tiny animal that's maybe not worth the energy exhausted to hunt and kill, do you waste that energy hunting and killing it, or do you wait for the bigger meal, right? You save up for the bigger meal. So you'll see situations like this where beautiful head and shoulders, but is it worth the energy? And again, it's all going to depend on your projection, obviously. But if your projection is up here, yes, it could be a beautiful pattern, but there's not enough meat on the bone to make it worth your while. So that's how I personally feel about this. Also, keep in mind, I'm using horizontal support and resistance, not the slanted one. If you're using the slanted one, a whole different story, because now you may have from 68 to 71s down here. But for me, we would have to now break these highs, 69, 90s. And if we break those highs, we're basically going to go to our target level. So that was a good question. So someone mentioned the pin bar. I think it was Jagger, right? Pin bar. So we know what pin bar means, rejection. Then currently after that pin bar, we got an inside bar, right? Got one of Orsi's inside bars right there. We know that an inside bar tells us what? I nailed it on the first one. Yeah. Usually my morning inside bar is a little raspy. The voice is not ready. I was doing my throat exercises this morning. My do, re, mi, fa, sol, la, ti, dos. Yeah, we know it means consolidation, right? So we have you guys watching the live stream. This is normal. Trust me. You're like, who the hell is this guy? We know we have a rejection here, right? A bear rejection, meaning the bulls pushed up the bear, smacked them down. We have an inside bar, which means consolidation. Now, I mentioned earlier, a lot of consolidation in the market. When we have consolidation, we should be on alert for, there's actually another one here. We can look at this later. Maybe a cipher here. I didn't even notice that. Yeah, potential patterns. So let's go down to the 4-hour chart. Let's go down to an hourly. And we're going to see a couple here. One I don't actually trade, so I'm not going to focus on that. But let's look at this little guy right here. If you're on Ninja and using Enigma, it's going to be a lot easier. But let's look at this little guy right here, where you've got an X to A. You've got a really deep B leg coming close to that 786, but not touching that 786. As always, make sure you use your own data just in case, but I don't think you're going to touch it. We know if we take a Fibonacci extension from our A leg to our B leg and back down, we're going to get a 127. That's going to be the completion point for our pattern formation. That is going to give us an extremely deep Gartley pattern. An X to A to B, B to C, and a C to D all the way up here at 169.86. Remember, this whole deal here as well is also that pin bar followed by the rejection. So if you're zooming back out to the daily, you're not going to be able to see it here, but this whole zone is that previous rejection zone. So if the market were to come up and retest that previous level of structure, it would be an excellent place to buy. You have a pretty decent risk reward as well. Yep, got the butterfly as well. That's the other pattern I mentioned. I don't personally have a lot of interest in it, so I didn't want to show it just because I don't care. But you would if we go downward, you would have a bullish butterfly as well. And again, just to give you guys some perspective, if we go down to, let's go over to Euro Yen real quick. Euro New Zealand. Just load up this deal right here. Euro New Zealand? Yeah. I'll give you some perspective on what we're looking at in the situation as far as risk reward goes, right? X to A, swing high to swing low, A to B, B to C, and then a CD completion right here. Let's bring in our risk reward. Nice deep Gartley, not a bad opportunity. So pretty cool trading opportunity on Euro New Zealand. Little combination of using higher time frame analysis, just identifying key levels of structure, hopping down to the fast lane, the lower time frame to find a pattern completion at that key level of structure. One thing you can look at it as well, we always want to ask the question. By the way, if you have any questions, type them in now, let me know. You always want to ask the question too here, does the pattern potentially have more legs, right? So meaning we've had a few opportunities in the past where, we've had bullish patterns in bullish markets, and we've talked about using those pattern formations as potential trend continuation opportunities. Is this something where any of you guys would be looking for maybe extended targets to the downside instead of just looking at it as a pattern formation and your traditional target ones and target twos? Is anyone looking for any type of extension here? While you guys are answering that, I want to see if this is indeed a cipher. We had a bunch of patterns hit over the weekend too. A lot of those ciphers. Come on, why are you being slow? Oh, doesn't like me. TradingView doesn't like me today. But nope, nobody looking for extended targets anywhere? I'll draw that on later. Any questions before, this is for YouTube, of course, before I kick you guys out, YouTube and TradingView? Obviously, live rumors are going to stay on for a little bit longer, a couple hours. But any questions before I boot you guys out? Jagger says 168 could be a good level. 168. So Jagger may be looking for extended targets down to this previous level of structure around here, or a little bit lower in this area. Real quick, what are your thought processes on having a primary and secondary portfolio? Are you talking like an investment portfolio and two trading portfolios, or like what can you go into a little bit more detail about that? Like two trading portfolios, and then like what would you be using them for? So that's a tough question without more details. Trading, investing, aggressive, conservative, long-term, short-term. A lot of ways we can go with that, but let me know what your question. If you can add some more detail to it before I boot you guys off, I'd love to answer it. In the meantime, I don't know why my computer doesn't like me in the morning. Two trading portfolios. What do I think about two trading portfolios? I don't have a problem with multiple trading portfolios. I think that, and there are a few ways you can do it. So let's take a look at it like this. You can do it by strategy, or you can do it by duration. So strategy would mean this, right? So when we develop a trading strategy, what's the first thing we need to do for our trading strategy, right? After we learn how to trade, we go into strategy development. We learn a trading strategy. What's the next step, guys? How do we make sure our trading strategy is, profitable? Right? We test it. During the backtesting process, we're also developing a portfolio. So a portfolio is like a group of pairs that we plan on trading with that strategy, right? Not all pairs will work the same with all strategies. So ideally, you want to group the pairs that give you the best performance. That doesn't always mean all of the highest performing pairs, but there could be some pairs that are in there just as, I call them like equity account smoothers. Like they don't really help you a massive amount. They don't have the biggest gains, but they help survive those drawdowns. So you can do that with, let's say you do strategy number one. Let's say you're trading a 4-pair portfolio on strategy number one, Everything is going good. You're running on autopilot. Now you want to add a little diversification to your account. Now you add strategy number 2, right? Now, when you test strategy number 2, that strategy could have a completely different portfolio than strategy number 1, for many reasons. One reason is that maybe it's a different type of strategy. So different pairs have different personalities. Maybe a grouping of different pairs is just going to be the better performing pairs. Another thing is maybe you don't want to have any conflicting signals. Let's say you're doing a counter trend strategy and a trend continuation strategy that may have conflicting signals. You may not want the same pair in both of those portfolios because there may be an instance where you have a trend continuation and a counter trend signal at the same time. And what do you do? So yeah, you can certainly switch it up and have multiple portfolios for different strategies. You can do it for duration as well, right? So when I used to day trade, when I swing traded and day traded, I had 2 separate portfolios, 2 separate accounts. I looked at them as 2 separate businesses. Give me 1 second to cough. And the reason I did that was for 2 reasons. One, I actually viewed them as 2 different entities. They had 2 different, basically, investment strategies. One was long-term growth. The other was kind of short-term pay bills. But I also didn't want contradicting signals, right? So my swing trading portfolio, the duration of those trades were longer, right? So those trades were held typically for hours to days, right? Maybe weeks. Every once in a while, you get a big one that lands for weeks. Day trading, that's going to be minute for hours. And I remember I decided to make 2 different entities when I ran into a situation where I was trading, I believe it was the Aussie dollar at the time, it had to be the Aussie dollar. I was trading the Aussie dollar as a swing trade. And it was like ran into previous structure resistance, and it was a great swing trading opportunity. And I entered it, right? And the Aussie dollar proceeded to do nothing. I wonder if I can actually find it on here. It proceeded to do nothing for about 2 weeks, right? Now, on the lower time frame, my day trading account, while we were in consolidation on the higher time frame, what do you think was happening on the lower time frames? We talked about it earlier. What does consolidation bring? And I'm lagging big time here. My computer's not liking these live streams. What do you think we were doing on the lower time frame while we were consolidating? I think it was might have been somewhere around here. Anyway, while we were consolidating, we were putting in massive amounts of patterns. And I remember I was running a live trading room, and we were nailing pattern after pattern after pattern. I'm talking about it was like 2 weeks straight of free money. Free money for everyone but me. Because guess what? I couldn't take any trades because I had my position, right? Same account. It was caught up in the higher time frame move that was just bouncing up and down. So I took a trade. I missed about 200 pips of profit from trades I couldn't take, and then the original trade ended up losing. So I was not in a good mood. Let's just say monitors got thrown. Now, luckily, if you guys haven't heard, I have a massive amount of monitors, so it wasn't a problem. But that was kind of the light bulb moment that said, hey, I got to have 2 separate portfolios so I don't get caught in a position where my money is held up in one thing and I'm missing, another thing. So yeah, I think it's an excellent idea to have 2 separate portfolios. I don't know if you have to name them primary or secondary. I don't think you have to rank one over the other. But either by strategy or by duration, I think are excellent ways to do it. So that was a very good question, old user 2. What happened to old user 1? Cool. Good stuff. Stewie says, trade different strategies at different times of the year, review when they're most profitable, and you know when to do which strategy. I found that's the best way and less confusing. That's an okay approach. I don't personally agree with that one. I don't think we should try to time different strategies throughout the year. But obviously, if you've done your back testing and you have a track record and you can do a very good job of predicting what strategies work during what time of the year and what doesn't, then you can do that. In my experience, I think I think it would be rather difficult to. I think the whole timing thing disrupts consistency. Um, I personally, and I would personally rather stay consistent with what you're trading throughout the year and just let the numbers work themselves out than try to pick and choose when you trade what and when you don't trade what. But again, different, not saying it doesn't work, right? Different strategies for different people. Different markets act differently as well. So a lot of it depends on what markets you're trading too. So good stuff. For the person who just joined on TradingView, sorry, you're a little bit late. We already went over our trade of the day, had a nice little rant as well. It was on the Euro New Zealand. Maybe we'll do Euro dollar another day. I can tell you this though, I have zero interest in the Euro dollar today. Now, obviously, I don't know what time frame you're referring to, but when I looked at the daily 4 hour and 1 hour this morning, there was nothing of interest to me. But maybe something tomorrow. So join tomorrow and we'll check it out. But here in the live stream, I just do one trading idea. If you want more, hop into the live room and we can take a look at the euro dollar as much as you like. We can go over your trading opportunities or your ideas, and I can give you my my analysis and answer any questions you have. So just head over to www.tier1trading.com, sign up for that 14-day trial. Costs you $1, spend 14 days on the platform, learn some stuff. All right. Live streamers, I'm kicking you out. Thank you for joining me. I'll see you guys tomorrow. Do me a favor on your way out, hit that